Back to the charts with Big Boss Crypto. And today will be a special kind of video. This is a very urgent warning about the potential stock market crash that will happen and ignite a very serious crisis in the world this coming winter and early next year. Today we will be looking at a holiday called the Shemitah, which has a significant history of being a bearish period in both stock and crypto markets. And we will look at highly likely bottom targets for the Dow Jones, the S&P, for Bitcoin, and the most likely top for the DXY, the US dollar dominance index. And we will as well look at dates where the crash will most likely occur and when it will most likely bottom out. So, without further ado, let's look at the charts. So, what is the Shemitah holiday? Well, it's a Jewish holiday mandated by the Torah, where every seventh year, a year long Sabbath must be followed. And during these Shemitah holidays, people have noticed a pattern where, during the end after each Shemitah, big financial crises tend to occur with a big crash. Now, I'm giving a huge shout out to this channel right here called Underground Roots for compiling this amazing infographic of the history of each Shemitah period and how it has affected the market, legacy markets, and as well as compile a great video about how these Shemitah dates are relevant to previous macroeconomic crises that have happened historically. Please check out the description for his video regarding the Shemitah. He has a great channel with unique content that both me and my brother has learned a lot from. So once again, please check out Underground Roots to learn more about how the Shemitah cycles work in depth. Now, after watching his video, we have delved down deeper to key dates occurring right after Shemitah, where these potential key dates indicate where the serious drop down occurs, as well as when the bottom of the stock market potentially might be. And looking back historically, the crashes tend to happen on the Rosh Hashanah holiday, as you can see in this infographic here above, where it happened on the 2008 crash. And the bottom usually occurs a few months after Rosh Hashanah, namely on either the holiday of Purim or Yom Kippur. So, we can illustrate this further by marking up the dates of the Rosh Hashanah, the Purim, and the Yom Kippur dates occurring right after the Shemitah on the Dow Jones index chart. And with the examples we will look at is both the 2008 financial crisis as well as the dot-com bubble. So if we begin looking at the 2008 crisis right here, on Rosh Hashanah occurring on the week of 29th of September 2008, you can see a big move down occurred right after. And for the bottom of the occurring in 2009 was right at Purim actually, at the beginning of March of 2009. And looking back on the dot-com bubble, in Rosh Hashanah of 2001, you can see a big move down, by a small retrace and another move further down. And Yom Kippur of 2002 was the exact bottom, but it was close enough to be a bottom when looking at the structure right here, before marching up on our new bull trend. So I've now marked on the chart the days for Rosh Hashanah of this year, being on 26th of September, which is about 2 weeks from now, and Purim being on March 6th of next year. And judging from previous examples, I find Purim on March 6th of next year to be most likely bottom from a time perspective, as the stock market tends to bottom around 6 months after a Shemitah end historically. And in this case, the date of Purim has great confluence of being a potential bottom. In combination of uses this with financial astrology, which you probably are familiar with if you follow influencers such as Marin Altman, for example. We have, from an astrology perspective, further confluence that this autumn and early 2023 will be very bearish. Besides Rosh Hashanah being on September 26th, as I stated, we have on the 28th of October a Jupiter retrograde in Pisces, which is, from an astrology perspective, very bearish and indicates that a nasty drop will occur. And at the end of February of next year, we have a nasty eclipse square Pluto, which we believe will be the last significant drop down. And then around Purim in the early March of next year, March 6th, as I stated before, we personally believe that the bottom will be in around that period and we will begin our Shemitah cycle anew, and hopefully the macroeconomic situation in the world is in a much better state by then. Alright, now that we know the significance of these holidays, can we find the bottom using technical analysis confluence? Now, if you may not know this, Bitcoin and the rest of the crypto market follows the price action of the traditional stock market. So, can we find confluence factors that can give us a rough estimate of a bottom for the stock market indexes and for Bitcoin? So, we'll take a look first at the S&P, where we have several confluence factors and areas of interest marked with these boxes. These three boxes marked right here. And as you can see in the first one, we are marked golden pocket fibs from the March of 2020 lows. As you can see, if we draw our Fibonacci levels from the March bottom to the all-time high, we have the golden pocket Fibonacci levels at 3,195 to 3,084 roughly. So that's our first area of interest that price will retrace to. And then further down, we have much more confluence factors pointing that we believe will most likely be the bottom target for the S&P. So we have something called the 1.618 trend-based fib target. So if we mark our all-time high to the low and lower high, we have a trend-based Fibonacci target that lies on roughly 2,413. So if I mark that, and if we draw our traditional Fibonacci retracement levels from the 2009 low to the all-time high, there we go. And as you can see right here, I wrote that we have a golden pocket Fibonacci level target from roughly 2252 to 2078, as well as a 0.702 target at 1904 roughly. And what I noticed as well for further confluence is that we have I'll mark that one, we have the weekly 800 EMA as support if we look at the weekly time frame in this box roughly, as well as on the monthly time frame the 200 EMA as support. So this shows to me that this is a very key area of interest for the big institutions in Wales. And lastly, I wrote something called the unfilled weekly green vector candle. You might ask, what does that mean? Well, if we look on the weekly time frame, and you see this indicator I have right here, this basically shows that we have lots of liquidity residing on that candle. And if you look on the green vector candle, this is unfilled of March of 23rd, 2020, when the big March crash occurred. And what that means to me is that we have unfilled candle gap where a lot of juicy liquidity resides, waiting to be retraced to. And these types of candles are super attractive to the big institutions, to the whales, in order to get access to that liquidity and fill in their orders. And if we measure a drop down from the all-time high to that price point, roughly there, this gives us around a roughly 50% drop, which, as we have discussed previously, that a recession correction tends to drop 50% from its all-time high to find the bottom. Moving on to the Dow Jones index chart, I marked two areas of interest that the price will most likely retrace to. First being our golden pocket target, being from the March of low of 2020 to the all-time high. There we go. Being in between 25,371 roughly to 24,584. But as I stated for the S&P chart, the box below of our area of interest we believe most likely that this is where the bottom will be formed. So if we draw our fibs from the 2009 low to the all-time high, right? We have a golden pocket target being in between roughly 18,114 to 16,834, and our 0.702 fib being at 50,550 153 roughly. Alright, now that we've drawn that, we can also draw our trend-based fib target. Where we have our trend-based 1.618 fib target at 18,580.39. Alright. And if we turn on our EMAs as well, we have the 200 EMA being right above it, so the monthly 200 EMA act as confluence here as well. And on the weekly time frame, we have the 800 weekly EMA to act as potential support as well. And like for the S&P, we have an unfilled weekly green vector candle that a lot of liquidity resides, and where the big institutions and the whales really want to fill in their orders. And now looking at Bitcoin, our trend-based fib target, if we use a trend-based fib extension, if we mark it from the April of 2021 high to the summer low and the all-time high, we have a 1.618 trend-based fib target at 10,672 roughly, and as well as an unfilled weekly green vector candle in that area. So if we unmark that one, and if we use our regular fib retracement tool, mark from our summer low to the all-time high, we have a 1.618 fib regular fib target being at 3,964 roughly. Go ahead and mark that one. And we have key monthly support levels right here as well. And if you don't know what that means, basically these are the monthly candle opening bodies that are being marked on chart as further confluence for potential support areas, where I believe that Bitcoin will most likely bottom in around this area of value, you could say. Now, this might seem as too hard of a drop for Bitcoin after all the crypto markets been through this year, but we have to remember that in the end, that Bitcoin is still a highly volatile asset, and these types of assets experience both the best gains, but the hardest drops as well. And in this macroeconomic period, people want to make sure that they can pay their bills and put food on the table. There's currently, I'm sorry, but there's currently nothing bullish about Bitcoin right for now. Yes, we will see Bitcoin reach new heights in a few years, as I've stated, to at least 235,000 US dollars. But obviously, we can't even think about bullishness as for now, because right now cash is king, namely the US dollar. And speaking of the US dollar and fiat currencies, another great confluence for the potential bottom to be in is the key resistance area marked of the likely top of the DXY that it will reach. We have previously speculated on where the DXY top might be, as when we drew our fib level targets from the 1985 high to the 2008 low. Oops, there we go. Where we have the golden pocket region residing in this area, as well as the 0.72 fib level and the 0.786 fib resistances levels, as well as when we mark our top from the 2001 to the 2008 low, where the DXY has recently almost broken through the historical 0.786 resistance and will march towards the impulsive targets of the 1.272 fib and 1.414 Fibonacci levels. And basically, if we take all the fib level mess right here, we strongly believe that the likely top of the DXY will be around 128.804 to 144.599. So in conclusion, the key takeaways from this video are the following. The bearish Shemitah holiday, as well as the bearish astrology, will create a rough macroeconomic period from the end of September until early next year. And keep in check with Powell's speech on September 20th to be the potential catalyst for the upcoming crash on the FOMC speech he has. The potential bottom of stocks and crypto will probably be around the Purim holiday on March 6th of 2023. And the most likely top for the DXY will be in between 128.804 to 144.599. The S&P will probably bottom around 2413 to 1904, and for Dow Jones in between 18,580 to 15,553. And Bitcoin will crash further to at least 10,672, and the bottom will be in between that level to around 3,964 US dollars. That's all for me. Thank you so much for your time and view. Leave a like and subscribe if you enjoyed the video, or a dislike if you didn't. Please stay strong and stay safe in this rough macroeconomic period that we are in right now. Have a wonderful day. Big Boss out.